Hi everyone. Today I'm going to cause probably a little controversy, but what good is a debate if everyone's on one side of the stage? Gold and timing. First, let's look at the purchasing power of the dollar, the blue line on this chart, and compare it to the price of gold. Clearly, as we can see by adding general lines from each start to each finish, there is a long-term reverse correlation, as we'd expect. As the purchasing power of the dollar gets weaker, gold prices increase. However, and yes, it is a big however, look at the importance of timing. From 1980 to 2000, both the purchasing power of dollars and gold fell together. Whichever brand of money you owned, real gold or fiat paper dollars, it lost buying power during that 20-year period. So where was the store of value during that period of time? What usurped gold's status as a store of value during the 80s and 90s? The answer is property, real estate. This chart of US house prices from early 1960s to present day is not in dollars, it's in gold. This is the price of real estate in real money, gold. One might note that the undulations of this chart are somewhat skewed in their timing from the same chart if we were using dollars as the base, but the volatility of prices is no less frantic. Gold is money all right, oh yes, and the price of goods, in this case houses, the biggest purchase most families make generally in a lifetime, these prices fluctuate in gold just as they do in fiat currency. In 1980, an average house cost 100 ounces of gold, 100 Krugrands. By 2001, 2002, it cost over 800 Krugrands. So imagine someone buying a house in 1980, exchanging 100 Krugrands for it. By 2002, they can get 800 Krugrands back. Timing is everything. And I can demonstrate this further. What does gold really represent? I mean really represent. What's it about? I think we'd all agree that it's a store of value, a store of wealth. I'm sure we can all agree on that. Okay, but wealth is created by work. So gold takes the value of our work done, the hours of toil we put in to earn our income, and stores it out of harm's way. That's the theory. In that case, if gold truly stores wealth in terms of the work done, then it should display a fairly sober relationship to the hours of work required to buy 1 ounce of gold. In other words, an hour of work in 1976 should buy roughly the same amount of gold as an hour of work in 2006. That would be a true store of wealth. Let's look at this. I've compiled some data and a chart for this purpose. So how many hours of work has it taken to earn an ounce of gold? Now unfortunately I only have a data range from 1976 to 2006. The average income ranges from $11,000 back in 1976 to around $48,000 in 2006. I used an average gold price for each year by simply taking roughly the high and roughly the low of the year and taking the average on that. And each bar on this chart represents 1 year. The large spike up to the left was 1980, and the low towards the right of the chart was 2001. The range is, as you can see, tremendous. A man on average wages had to work 70 hours in 1980 to get 1 ounce of gold. Yet in 2001 he could only release that store of value to receive 14 hours of work from an average salaried worker. So let's just repeat that. In 1980 he worked more than 70 hours to get a Krugerrand. In 2001 that Krugerrand would only get him 14 hours of work from the same kind of worker, a guy on an average salary. I find this chart absolutely fascinating. No doubt I should expect petty squabbling to come over the data and the numbers, but I charge that the implication is clear. Gold's value in terms of storing the value of one's labour is no less volatile than its value against the dollar, housing, or another infamous comparison, the Dow Jones, which we see before us in this chart. Anyway, there you go, some food for thought on gold and what it really means to say that gold is a store of value. I hope it's been worthwhile. Thank you. Bye.